How's it, my fellow traders? Welcome back to FX Rhapsody. Today we're doing analysis on two currency pairs. We're going to be doing on the USD JPY, and then we're going to be looking at the Euro USD this time. So before we hit the charts, just go visit my website. It's on the bottom left corner over here, where you will find my website, and then you can find some resources on the website. We're using the COT reports when we do our analysis, and you can download the COT reports for free on my website. There's previous analysis, there's some strategies, and especially for those of you that's starting out on trading, there's some nice video categories there that you can go and watch. So let us hit the charts. So we're looking at USD JPY first. We're doing top-down analysis starting from the daily and moving our way down to the 1 hour time frame. So on the daily time frame on the USD JPY, what we can see is we can see previous high being broken. Okay, this is this area, and we can see price pushing through that, and now we see price retracing a little bit, forming a nice little high. And on that retracement, you can just pull a Fibonacci. The reason I'm pulling the Fibonacci from that low to that high, okay, is we have as the candles were pushing up, we have a little bearish candle in between the bull candles. Okay, I'm just going to zoom in a little bit and just show you there. That is the candle that I'm talking about, for those of you who's not seeing it. So that is forming a resistance in the market. So that is where I pull my Fibonacci from here to there, and then retracing back to our 62% area. And as you can see, touching nicely in that area and then pulling back on the daily time frame. On 4 hourly, we will see it a little bit closer. So 4 hour time frame, okay, just zooming out a little bit. So this is the area that I was talking about, that created that little bearish candle in between the bulls on the daily time frame. As you can see, it's a nice structure in the market, nice support area in the market that it was forming. And then also, if you pull your Fibonacci from this high, from this low here, I'm just going to go the lowest there to that high, and as you can see, price just tapping into that 62% area. So will this be a nice area for price to carry on pushing up? Okay, will that be a retracement? But we will see in time, because you know, the markets are a little bit up and down. We don't just predict the market, but we react to it. But if you did react to that area in the market and you placed a little buy over there, you would have been 77 pips already up in profit. Hourly time frame, let us see what's happening on the hourly time frame. Okay, every time I do my analysis, ending the analysis, I have a little zone that I'm focusing on. Okay, as you can see, this was the previous analysis where we ended. So we have this little zone, and you can see price breaking out on that. Now, remember that retracement I showed you? Okay, look at this. You see the bearish candle of the bullish candles pushing up all the way. You see that bearish candle, okay, just sticking out there, forming that area of support in the market. Okay, we have a retracement that happened, as we saw on the higher time frames. The retracement happened all the way to that 62% area, and just hitting that support area, as you can see. Okay, so you must always look out for these little candles in between all these, be it bearish candles and a bull candle in between them, or in this scenario, this huge push in the bull market forming a little structure in the market, that little bearish candle, and that is always a support area. So just highlight those areas and you can see price retracing to that, and look at that. So you have two confirmations. You have price retracing to the 62%, and then also that support area in the market. And that is where a nice area that you could have caught your little buy upwards. Okay, so when price broke that area and it started moving up, there's obviously a couple of areas that you could have taken trades. So we had price going up and then kind of just consolidating here and then pushing up again, you know, forming an forming a nice fair value gap in the market. Okay, we always talk about them, you know, price breaking structure. As we can see, you know, that's the area the price is breaking. That was a previous high, going low, going up, and then breaking that area in the market and then pushing up. Let us just pull a little Fibonacci in here. Let's see this retracement. Okay, so that's a swing low, swing high, very small, but you see price going in between the 62% to 79% area. Okay, two confirmations, guys. It's a Fibonacci, it is a fair value gap, it is a buy. And then price going up again. Then price started forming high over here and then retracing down. And remember when I said to you, you wait, you don't always just wait for price to retrace to a certain area. So on the high time frames, you were waiting for price to come and retrace back to that 62%. So you trade that area. Okay, so you see that high forming, then price going, breaking that low area in the market. Just going to highlight this again. Okay, breaking that area in the market. So breaking that low, going up again, retracing. It's a very skewed line, but you know what I'm saying. So retracing back again to, let's take a Fibonacci out from that high to that swing low. Okay, swing high, swing low, going up, tapping into the 62%. I sound like a broken record every time I talk about this, but I mean, it happens, guys. Come on. That's a very nice little sell down. Okay, that's your first entry. All right, and then look at that. You sell down to the retracement happening on the higher time frames. So you mark it out in the higher time frames. That's the area that you're waiting for price to retrace back to. But again, you trade the price going to that area. Okay, so again, a couple of trades you could have taken. So now we're looking at price going towards the end. So I'm just going to take this out. So what I'm looking at is obviously if price is going to continue downwards, we want it to break that area in the market. Okay, that's the area that I wanted to break. If it will continue downwards and then continuing upwards, we would like to see price breaking that high. So you can see price going up and then just, you know, ending the week basically on that level, right? So I want to see price breaking that high, going up, then forming some sort of a fair value gap or retracement, you know, then you trade it up, or you wait for price to come down, breaking that area and do exactly the same. So those are the two things that I'm going to be waiting for this week. So moving on to our next currency pair. Which one did I say we're going to do? We're going to do the Euro USD this time. We're just switching it up a little bit. Okay, we're going from the daily time frame. There we go. Just zooming out a little bit. So on a daily time frame on the Euro USD, what we can see is a nice high being taken out. So liquidity, you know, it's a liquidity run of the candles. So that was our previous high in the market. So you can see price just pushing up on a daily time frame, just taking out that liquidity that was lying just above that highs, and then just retracting it. So pulling back into the market or into that area again, just, you know, staying in this consolidation phase. Let us go to our 4-hour time frame. There we go. So 4-hour time frame, a couple of things happening here. Just wanted to show you. So you see price going down, you know, forming this high lows, and just moving downwards. And then we saw price making a turn at the bottom. Now what it did was it left out all these little liquidity areas in the market. Okay, that was the first one. That's the second one. You know, there's a couple of them. So you can start marking them out. But I mean, you can see all these areas in the market. Okay, so once price broke a structure, meaning it's taking out liquidity that's on the top. So you can see this area over here, the area being broken. So, sorry, I'm just gonna, that's the area that's been broken. And then I'm gonna do this last little one. There we go. That's the one I'm actually looking at. Okay, so I'm just gonna carry on so you can see how price has been taking out. So price came down, leaving all these liquidity areas in the market. All these highs were still intact. And then you saw price breaking structure. Just zooming in, then we can see. Okay. And then what price did was it started taking out these areas in the market. There's all these highs. You have a liquidity run up in price. So price action hunts those liquidity areas in the market. Now, as soon as price broke that area, okay, that is where you start looking at entries. You take your Fibonacci from this low, swing low, to that swing high. Okay, so it broke structure. So now you wait for that retracement back. And where does it retrace to? Again, broken record, 62%. That's it. That's the area that it retraces to. And that's a nice little buy that you could have taken. Okay, so if you did take this buy, if you saw that and you took it, I mean, that's another 160 odd pips up. Quick and easy trades, guys. And it's just being patient. Okay, this is basically the week, just carrying on, price continuing downwards. Yes, you could have caught a lot of different trades going down, But I mean, if you just waited for that one retracement, there's 160 pips just on one pair that you could have taken up. And depending on your lot size, I mean, that's a lot. It could be lots of money. So let's look on the hour time frame and where we're at and what happened. So again, you know, ending off previous weekend, we had a nice little area over here and over here that I was looking at. So price, I think I did make a video about this, if I'm not mistaken, during the week. Just go have a look. And then price going, retracing up again. So price breaking that area, going up again. So what you do is you pull your Fibonacci, like always, breaking structure, going up, okay, retracing to the zone that I'm talking about always, the 62% to 79%. So that's a nice little sell you could have taken, okay. So it's a little up and down. Yes, I did make a video. I was talking about how you could have, again, you know, traded this one up. But I think the entry was in the 5 minutes. So just go have a look at my videos, my previous videos, and you can find it. So you trade the retracement up, and then you sell it down, and then you started waiting again. So price consolidating in this low area, and then breaking structure once again. This area over here. So this is the area of structure that is broken. So again, there's a high that was left here. Just taking this out so you can see again. So there's a high, okay, that was left, and then price going, creating another high, pulling down, and then breaking that high. So price action, hunting that liquidity that was formed over here, and liquidity over here. So once it broke that structure, price started hunting that liquidity, coming down, okay, to this area. Again, let's just have a look at our Fibonacci retracement. It's not always the case that it pulls back, but I mean, you have a couple of scenarios. So look at that. That's scenario one, you know, that you could have taken a trade. So it broke the structure, price going up, retracing to the 62% again, you know, right about there. There's no rocket science to this, guys. I mean, it is quite simple trading, easy trading. So price breaking structure, forming a low, forming a high, retracing back. So that is one entry that you could have taken. And then another entry that you could have taken if you didn't use the Fibonacci was your fair value gap. Okay, right about there. So again, price breaking structure, right about there. Okay, that's the area that price was breaking, or the structure that was broken. Price created a fair value gap in between those candles. Price going up, retracing back to the 62%, which is also into the fair value gap. So it's two confirmations. And that is a nice little entry that you could have taken upwards. And if you did take that entry, I mean, that is another 160 odd pips. So that's two currency pairs that you just could have taken, you know, or, I mean, not two, this is still the same currency pair. I mean, two entries that you could have taken on a higher time frame or just on a lower time frame. So guys, you must always look out for those areas in the markets. Please, guys. Two scenarios, two strategies that I'm using, fair value gap, Fibonacci. That's it. Nothing difficult to it. It's quite relatively easy. So these are the two areas in the market that I'm looking at. So I'm looking at that high. I'm looking at this low. So if we want to see continuation upwards, I want to see this area being broken. If there's continuation downwards, I want to see this area breaking in the market. So let's look at the COT reports. On the euro side, what we can see is the euro strengthening a little bit. Okay, so it has hit that little bottom here, but then we saw a little push, meaning longs were opened in the market, and then a lot more longs were, or a lot of shorts were closed in the market. So you do see that shift in the market. But again, you know, weird times in the market, weird times in the world. So don't just look at this. This is just a directional thing. So that's how I use a Fibonacci, the COT reports, just to find out direction, how the big banks and institutes are going. So will they start pushing up? But again, we have seen this negative 34, then it goes weaker again, and then it starts getting stronger again. So just be wary when it comes to that. All right. So I didn't look at the COT reports when we did our previous pair, the USDJPY, but I mean, that you can do yourself. Just go have a look, download it from our website, and just have a look and see what the COT report says regarding the Japanese yen. So guys, that's all from my side. I hope you enjoyed this analysis, and if you did, don't forget to hit that like button, hit the subscribe button, the notification bell there's definitely more videos coming your way. So guys, I hope you've been having a wonderful week and a wonderful weekend. Stay safe and happy trading, guys.